Welcome back. This is Seewing Yi from the Yi Real Estate Network. And today I have some very great high level information based on my 20 years of research and due diligence on the migration of people moving from one area to another in a country. My purpose is this on the behalf of our network real estate investors that rely on my personal guidance and once we migrate our strategies into newer markets, then we set up teams, we set up local market teams to allow our real estate investors to buy those properties in the specific area. So again, for the past 20 years, we have helped hundreds of real estate investors. Most of you are from California. Some of you are in the upper Northeast, in high price markets, and in the Midwest, high price markets. We have several thousand members that rely on my personal expertise so we could enter emerging markets, so we can offer cash flow turnkey properties at the best areas in the country for long-term buy and hold. So we're buying long distance, remote, turnkey investment properties where we set up teams of property managers in the whole one-stop shop in various markets where all you gotta do is just once you purchase those cash flow properties at 25% down payment, you can invest for the long term pretty much remotely. And so you can scale your portfolio and achieve retirement in approximately around 10 years. So without further ado, let's proceed accordingly. And here we are. And I'm using one of the resources that we use. I have used many other resources throughout my more than 2 decades of guiding real estate investors to buy cash flow properties. And one of the resources that we use is John Burns Research Consulting. Okay. And I'm using their data, which is from a high level, is very interesting. So we get into the emerging markets. This is my business model. We have the best business models in the country, and our investors are consistently making high returns with long distance investing. As I said, low affordability, high cash flow, great rental market, and population growth and job growth, all the metrics that people require in order to buy investment properties. Now, some of you who are watching, you may not be an investor right now. If some of you are focused on buying the primary homes in whatever market you're trying to purchase, you can benefit from this information as well. Because why not? Why not? If you want to buy a home to live, if you or have a goal of doing owner-occupied properties, why not move to a location? Pack up and move your family and move to the best areas for future growth, so you and your family can achieve the financial dream of buying a primary home as well. All right. So again, our video is geared toward mainly for mom and pop real estate investors, and secondarily, you as a primary potential home buyer can know how to project, how to move to a better location for your future to buy an owner-occupied house. All right. So without further ado, so this headline from John Burns Consulting is 3 migration shifts shaping housing market in 2024. To me, in 2024 and way beyond. Okay, the beginning introduction states that it is less activity. The COVID migration surge has pretty much ended. Yeah, we know that. Keep driving to the outskirts of high price areas. Outskirts of the high price area. Again, you go deeper into the suburbs where homes are more affordable, okay, where people are migrating into the suburbs. That is the theme for migration for years and decades to come. Invest in the winner markets. And I'm going to show you, don't we all want to know that? Invest in the winner market. See the graphs below for migration, winners, and losers. This topic, my headline for this video is migration, winners, and losers for real estate investors and potential primary home buyers as well. So this article is dated Thursday, a few months ago, actually, okay, by John Burns. Okay, John Burns, U.S. Demographics, Insights, and Strategies Report. All right, so here it is. Number 1, 2024 migration shift is the The COVID migration surge has ended, which is understandable. And of course, the current 2024, the domestic household moves are at a 9.7 million, which is lower, of course, lower than the epic housing boom migration back in 2021. And so 9.7% is really down to the 2000 and pre-pandemic level, really, if you think about it. So at 2018, we do not know about the prior 2018 data, but so today, 2024, migration household moves are similar to the pre-pandemic migration years of 2018 and perhaps a few years prior to 2018. So still, people are moving, but not at exaggerated waves that we saw in 2021 and part of 2022. All right. So here's the share of household moves within the same metro. As you can see, the pandemic move has pretty much over and we're back to the new normal, if you will. The current level is similar to, with the exception of 2020, is similar to 2019 and 2018. And of course, here's the share of total household moves from urban to suburban counties, trailing 12 months average. As you can see, the peak is 2021. Now we're trending downward back to this level right here, which is similar to the pre-pandemic years. All right. So the takeaway for the real-time migration is as follows. The affordable areas near major higher price metros are migration hotspots. And here it is. Here's the migration hotspots are smaller, affordable metros near high price markets. By the way, good news for our current investors and the teams that we have developed in a local market. Again, I pride myself all these decades of investing, helping thousands of our investors, and you could be our investors as well. As long as you could subscribe your email into our website below, so you can become a free member of our investing community. So through your email, you will receive daily updates about real estate investing to education and opportunities free of charge by being a member of our organization. With that said, again, I pride myself in getting ahead of the market, ahead of everyone over the years, and many of our investors have followed my lead, my own personal guidance, because I do an advanced reconnaissance. Being an ex-U.S. Army, 20 years retired, when I was in the military, I do military missions where I do advanced reconnaissance in the landscape. So I translate that into, since my retirement 20 years ago from the military, I continue to use this same philosophy of doing advanced reconnaissance of emerging newer markets throughout the country. So our investors can buy affordable home prices and match that with the rental rates, and we can achieve positive cash flow in the fastest growing markets in the country. So we move markets to markets depending on all these advanced data metrics that I'm sharing with you right now. So isn't that cool? I don't think anybody in the nation are doing what I'm doing, really, if you think about it. Anyway, getting back to the specific markets about what we're seeing. Household leaving Austin. Yeah, we've been hearing about the Austin market. It has skyrocketed in home prices in the past few years. It's been a very robust market, will continue to be, but they're going through a little bit of correction through the high inventory. We all heard that. But the medium, still, nevertheless, Austin, long-term, they could be fine, all right? They're not going to crash because of all the population and job growth and being a high-tech hub of the Central America, if you will, right? Austin is really have a lot of amazing high-tech growth for decades to come, for that matter. But the median price of Austin is extremely high now. You should have bought in Austin 3, 4, 5 years ago. When I tell you to do, my investors, for those that purchased 3, 4, 5 years ago, you bought it at a very historical low rate, 3.5%, 30-year fixed rate mortgage for investment home. And at that time, 3 or 4 years ago, prices in Austin were like the cookie cutter entry-level homes were about $200K. Now, the Austin home prices have doubled in value in the past 3 years. So you can't cash flow anymore. So that's fine. So the trend based on John Burns, and I follow his trend also. Not that I follow him exclusively. I have my own research strategies as well, but this graphic is an amazing similarity to how I do it. Anyway, so people, if you migrate 1 hour, households are leaving Austin Metro where the median price is 443, and they're moving to just 1 hour down the high I-35 corridor. This is a metroplex. Austin and San Antonio is going to be merged into an amazing, gigantic metroplex for the next few decades and beyond. So, but right now, look at the median price of a home in San Antonio, $319, compared to Austin, $443. We're talking 1 hour away. We're talking like 40 miles down the I-35 freeway from Austin, San Antonio. You find a median price home at $319. It's amazing, right? Home prices were like 40% lower, just a skip, hop, and a jump away from Austin to San Antonio. So clearly, we see a migration of people moving from Austin to San Antonio for much better affordability, and also Killeen as well. Killeen is north of Austin, we're like an hour north of I-35 as well. And look at the median price of home prices there, $260K. So our investors, we buy at like 20 to 30% below the median price for a particular area. That is our metric. I could literally take our investors in San Antonio to buy a new construction single family home for like $220,000, and it rents for like $1,750. So at 25% down payment, even with the mortgage rate as high as it is right now at around 7%, you can still achieve positive cash flow. Same thing with Killeen. I think there's one box that John Burns is missing. The migration is going into South Texas as well. South Texas, John Burns should add an extra box right here. Okay, South Texas, which is McLean, Texas, which is in Hidalgo County. All right, do your research. McLean, Alamo, Farr, and Edinburgh, all those sub-cities within McLean, Texas, South Texas, by the Mexican border. This is an amazing, fast growth sub-market, which is the median price is even lower than 260. So the median, I'm not sure exactly, like 250K. So amazing. A lot of my investors are entering the South Texas market in addition to San Antonio and Killeen. All right. So and the same thing here. We have teams available in Central Florida, whereby you don't have to deal with there's no HOA, there's no flood zone. It's not in a hurricane zone. So all the negativity we've been hearing about Florida is all only on specific areas. Orlando, same thing. The median price of Orlando getting very high. It's getting to be not affordable. People are migrating away from Orlando Metro, even though our investors are purchasing Orlando 5, 6, 7, 8 years ago. And those investors that I guide along have achieved amazing wealth over time. But now you cannot cash out at all in Orlando. So people are all moving to where? They're moving to Lakeland. Lakeland, really no cash flow. Okay, I'm not recommending there, but Daytona Beach, it's a little bit too high for my price. But in Ocala, in Palm Bay, we have teams available. In Ocala, I have a property there that I purchased a year ago for below the medium. As you can see, Ocala is Central Florida, right? I expect to see a lot of people moving to Central Florida from other areas of Florida due to HOA issues, skyrocketing insurance costs, hurricane issues, weather-related, and all those kind of things. And you don't see that in Ocala and Palm Bay, which we will have a team located in Palm Bay as well. Fast-growing. I see Ocala and Palm Bay going to be very fast-growing. So it behooves you to entrench and execute your action plan to buy single-family homes in Ocala for the mid-200s, and with 25% down payment. Same thing with Palm Bay. You will achieve positive cash flow with some builder rate buy down as well at this very moment. Okay, I don't recommend anything on this side of the country. The numbers does not work. You're not going to cash flow in the Sun Belt in the Western region. Already very pricey, but if you're a primary homeowner, nothing wrong to migrate from Denver into other areas of the Sun Belt Western region. Okay, the 2024 migration shift. It's number 3, which is the winners and losers among the large market. So the winners are up over here, the green color. the areas and the losers, if you will, or the negative migration and the weaker housing demand. Let's quickly go from a high level. The strong migration will continue in the Myrtle Beach, South Carolina, and Raleigh, Durham. And then the previously strong migration now trending is less strong, which is still good. Trending less strong, still a positive growth, right? But not as fast as during the pandemic. And the cities in this category are Atlanta, Boise, Charlotte, Dallas, Fort Worth, Houston, Jacksonville, Nashville, and San Antonio. By the way, we have teams available, okay, one-stop team is available. We network with, we have a relationship with to buy new construction at very low cost in some of these areas. You get more details if you subscribe to our network newsletters, right? Free of charge. In the outskirts, in the suburban Houston, we have teams available, great new constructions at very low cost in the low 200s, and it rents for like $1,800, $1,900. Needless to say, at 25% down payment, you will cash flow very nicely. In the suburbs of Houston, we have teams there. We also have current teams in Jacksonville. Same scenario, right? Cash flow, 25% down payment. And in San Antonio, we have market teams in the best areas in the country. So previously strong migration, now barely positive. Austin, Las Vegas, Phoenix, and Tampa, we're not there because these home prices are too high for our investors. The numbers does not work. You're not going to cash flow a 25% down payment. So we are not in these four areas, although we were there 5 to 10 years ago, right? Our investors bought 5 to 10 years ago when the prices were a lot cheaper in these four areas. So if you took action per my guidance back in those days, you made out like a king. If you sat on the sidelines back in 5 or 10 years ago, guess what? You're going to be wondering, what if, could have, should have, whatever. Okay. So anyway, previous lost houses, now slightly positive migration. Nothing wrong with that. Minneapolis, Riverside, San Bernardino in the Inland Valley of Southern California, and in Sacramento in Central Valley from the Bay Area. But these prices are very high already. Investors, at least my Turnkey investors, should not go there because the prices are still pretty high. Okay, on the red color, this is the losers of this particular headline article: negative migration and weaker housing demand, which is inside Metro Orlando and Southwest Florida. Although deeper inland from Southwest Florida, we still have some good opportunities, such as Lehigh Acres and LaBelle. So our investors are still buying in the suburbs of Southwest Florida. Okay, that's the suburban migration. And the previously small out migration now trending as big out migrations. That means people are leaving these high price, huge metros, going to other areas. They are San Francisco Bay Area, where I live, Philadelphia, where I grew up from. I do have a lot of connection to all these cities in my lifetime. I grew up in Philadelphia, otherwise known as the ghetto. Yes, that's right. I grew up in a ghetto. All right. Just so you know, I came a long way. All right. Portland, Oregon, Salt Lake City, San Diego, and San Jose. That's where I live right now for the past 30 years. Live where you want to live, but invest where the numbers make sense. That's what I'm doing. Okay. If you know what I'm trying to say. Finally, a very large domestic outmigration offset by strong international migration. My definition of strong international migration is those highly educated millennials from educated countries, those high-tech millennials coming from Europe, coming from Asia and other part of the country into this high-tech hub, such as the Bay Area, Silicon Valley, right? And the big metros, expensive metros, Seattle, Washington, D.C., Orange County, New York, Miami, Boston, Chicago, Los Angeles, where the median price of homes could be $1.5 to $2 million. Although people are moving away from these expensive areas for the past number of years, but they are replaced by international, highly educated workforce of high-tech, very smart people that want to make a killing in the high-tech world in these 9 markets. Okay? All right. So again, to recap, this John Burns consulting graphs really pretty much are in similar trajectory with how we do it how I take hundreds, if not thousands of our investors for more than 20 years. I've been doing this. Okay. I've been doing this longer than anybody else out there. So anyway, that's why we offer great cash flow properties, the highest growth area, affordable areas, good migration and population and job growth areas. So everything is turnkey, done by property managers. What a business model, right? So if you want to learn more about business model and the concept I just shared with you, again, just put your email on my website below so you can become a free member of our investing community. Other than that, if you see any value on this video, please like and subscribe to my YouTube channel, and also comment below where you live, or where you're coming from, what's going on with your local market. Or you looking to, if you're a primary home buyers, are you looking forward to move? And if you're looking forward to move in the next few years, where you want to move to? If you're investors from wherever you're in the country, you're watching this video, let me know what's your strategy. Do you like my ideas of buying investment properties at the fast growing areas, affordable areas where you can cash flow with 25% down payment? Many of you know that cash flow is pretty much almost all gone based on the skyrocketing of home prices and elevated mortgage rates in the past few years. Anyway, there's still a lot of opportunities out there for investors. Okay, as always will be. So anyway, thank you for watching. This is Seewing Yi. Hopefully you enjoyed this video, and I'll see you on the next video. Have a nice day. Bye-bye.